It's Friday Coffee with your mortgage man Eric, and here we go. Today is going to be a little bit of a controversial one here, so tune in. What is the difference between a mortgage banker and a mortgage broker? Now look, just an FYI disclaimer, I'm not getting into any keyboard battling. I will refuse to do that. I will refrain. I'm not going to invite that type of behavior. Because I know that this is going to kind of hit some nerves when it comes to the mortgage broker side of things. And this is just my opinion. And if you are a mortgage broker and you feel compelled to put your own video together and plead your side of the story, God bless you, right? This is my side of the story. I've been doing this for 20 years now, mortgage lending. I used to be a broker back in the day. Oh wow, when I first got into the industry, 1999 through 03, 04, 05, somewhere in there, where I used to broker deals. So I'm familiar with the broker side, being one at one point. And look, we interview a lot of people that come back to the mortgage banking side, loan officers that used to be mortgage brokers, right? They used to be their own broker, or they used to work for a mortgage broker, and they don't want to do that anymore for a number of reasons, and they come back to the mortgage banking side. So we are always kind of filled in, kept in tune with a pulse on the industry with what's happening. So let's dive into it. Why would I want to be a mortgage banker versus a mortgage broker? And look, this is some good information to not just the general consumer, the general public, but to our real estate agents, our realtors, our referral partners as well, because sometimes they truly don't know all of the devil in the details of why would Johnny be a mortgage broker versus a mortgage banker, or vice versa, right? Why would they choose to be one or the other? And here's my opinion on this. We're going to dive into it. So if you're a mortgage broker, here's the biggest benefit. And in my opinion, it's really the only benefit. You're going to have slightly better interest rates. That's it, okay? That's it. Now, any mortgage coach out there will tell you that if all you have to offer more than your competitor is better interest rates, what does that say about you and your level of service, your personability, et cetera, et cetera? Look, and I've heard that for 20 years. You cannot just have the best interest rate. Sure, you're going to obtain deals. Sure, you're going to close deals. Absolutely. A lot of refinances and a lot of rate shoppers, right? And if you dive into that, what type of consumer are you dealing with normally that only wants the lowest possible interest rate? Look, we all want low interest rates. That's a given, right? Nobody comes in, oh, I want a higher interest rate. Nobody ever says that. But you understand what I'm saying, that you have a consumer that's just fixated. They could care less about anything else. They could care less if their refinance takes 97 days to close. If they get an eighth lower on an interest rate, they got something to brag about, right? To their coworkers or to their neighbors or whatever their reason for doing that is. So on the mortgage banking side of things, let's start to differentiate these two, right? On the mortgage banking side of things, it's our employees. They are our underwriters. They are our closers. They are our doc prep department. They are our processors, right? Those people that are working on your loan are on the same team. They're from my company, not the company I own, but the company I work for. And we are on the same team, whereas a mortgage broker, they're standing in line to be a middleman, brokering a middleman. And they're sending that deal to what was referred to as a wholesaler, where that is not the company they're employed by, right? It's just another company. They don't know that underwriter from Adam. They just don't. They don't know the closer. They don't know the doc prep department. They don't know those employees from Adam. They just don't. That's how it is. So if you were to take this guess, who has the most control over a loan file? A mortgage broker or a mortgage banker, right? That's an easy one, right? Because I have the capability of communicating with the underwriters in my company or the closers, right? The funding department, Personally, I can pick up a phone and call them, and if they don't answer, they will call me back within a relative time period. Can you say that about a wholesaler? If you can, they are far and few between, and they usually have gatekeepers, and they just don't allow the broker side of things to bombard them with calls. There's a huge differentiation between the two when you're talking about just that particular item. So appraisal ordering. So we order our own appraisals. A mortgage banker, we have our own AMCs, appraisal management companies, that we can choose from. If you're a mortgage broker, you are being directed who to order the appraisal from. It is their appraisal management company that they are telling you you have to order from. Other things, when you're dealing with a mortgage banker, your transaction's not just a transaction, right? I get it. Yes, it is a transaction, but it is more than that, and we're providing you with more than that. We're providing you with milestone updates. We're providing you with video updates. We have a scenario desk as well, and I know that some mortgage brokers can say, well, we can obtain scenario desks as well. It's way different because, again, it's our employee. I can email the underwriting manager and ask him about this scenario. He's our underwriting manager, the one that will be signing off on your loan. Or you're just emailing some help desk if you're a mortgage broker. Way two different worlds. Moving on. CRMs. We have CRMs. Usually mortgage brokers don't. Documentation. So check this out. When we order your initial disclosures, they're our disclosures. I see them, I get a copy of them, I got to electronically sign them, I know when they're going out, I'm carbon copied on the email. A mortgage broker, it is the wholesaler. They order from the wholesaler, that third party, right? And then that party sends out the disclosures or the documents to the consumer. And a lot of times there's things on there that aren't correct. So that's not a fun situation. And I remember that being back in the broker world that used to irritate the heck out of me. Here's another one. Down payment assistance programs. Guess what? Mortgage brokers don't have down payment assistance programs. They may tell you that they do, and they kind of do. There are some out there that give you a portion of the down payment, not the down payment in its entirety. So mortgage bankers, of course, yes, we have the capability of giving you down payment assistance programs. Another item. We have the complete realm of departments and support staff, HR and compliance departments. Now, we talk about compliance. Let's segue on this because here's why some people choose to go to mortgage brokers or to be a mortgage broker, because of the lack of compliance. And I will never name drop, but I know of those specifically who used to be bankers who are now brokers. And one of the biggest reasons why they are now brokers is because they were done with the banking world, the corporate world, giving them compliance issues. And they wanted to pay for this and pay for that and pay for, these big lunches and gatherings for realtors that are RESPA compliant-ish issues. So if you follow me there, right, there's, is that right or wrong? You make the decision. In my opinion is they want to violate some RESPA issues. Now follow me here. The CFPB, the Consumer Financial Protection Bureau, the people that one of the many agencies that govern us, would not ever go in and audit and raid a mortgage broker. There's no money there. Even if they did and they found them guilty or in violation of several things, what are they going to get? They can't fine them millions of dollars. So there's the thing. When you're a broker, you can get away with skirting around some of the laws and the policies because nobody's going to audit you. The CFPB is not coming after you. On the other hand, the mortgage banker, we have to be in compliance. So when you look at it like that, we are more compliant. We follow the laws, the policies, and the rules because we don't want to be shut down. We don't want to be fined millions of dollars. So there is that discrepancy as well. Here's another one. LO Comp. The LO comp rule that was instituted via the SAFE Act, I think it was back in 2011, in an attempt to clean up the industry, which they did, said that a loan originator has to be paid the same on each and every deal. Doesn't matter. Doesn't matter if you've got a 580 credit score, 680 or 780. Doesn't matter if it's FHA or conventional, right, et cetera, et cetera. And that's because of the steering that used to happen, especially in the broker world. So the brokers can kind of get away with this. Now, the employees of brokers, not so much, but the owners of the broker shops can certainly dodge the LO comp rules. And this is how they do it. They sign up with Wholesaler A, let's call it, and Wholesaler A is going to pay them, let's say, 150 basis points. And then they sign up with Wholesaler B, that's going to say, let's pay them 100 basis points. So you would take your shopper, your 780 credit score, 20% down, right? You would take them to the wholesaler that's going to pay you less. It's going to have better rates. You're going to take your FHA deal that's hard, lower credit score over here, that's going to give you more basis points, more compensation. So the broker world of things is skirting some of the LO comps type of stuff as well. So there's that. Back to the mortgage banking side of things. We have plenty of oversight. We're Fannie Direct. The brokers aren't. And here's another thing. MI, mortgage insurance. Not always can a mortgage broker shop you to the 6 or 7 different mortgage insurance companies that are out there. Now, it doesn't apply to VA or FHA, but it certainly applies to conventional where they're putting less than 20% down. An example, just one yesterday on a $354,000 loan, when we price shopped 7 different mortgage insurance companies, or 6 different mortgage insurance companies, the highest premium we did, we were doing a single one-time premium buyout. The highest was 0.82 and the lowest was 0.57. Now think about that. That's what, a quarter? A quarter of a percent on $354,000? That's pretty hefty. That's a lot of money. It's what, $800, $900? I mean, that's a lot of money that you're saving the consumer. And check this out. What a lot of people don't understand is that when you're putting less than 20% down conventional loan, that interest rate that you think that you're saving somewhere else, because some other company's giving you 1/8 of a percent lower on an interest rate, the mortgage insurance that they are giving you could be eating up the so-called savings that you're getting. And here's why, and this is exactly why realtors, real estate agents get involved with purchase transactions and like to allow you to make a better decision on who to use for your financing, because it's different than a refinance. You can't take 68 days to close. You usually got about 26, 27 days to close, and some of these companies can't do it. So there's that you have to think about as well. Refinances, it's a different story. The mentality of the refinance is usually different as well. But when it comes to purchases, man, huge difference. So there are some differences between the mortgage banking side of things and the mortgage broker side of things. Obviously, in my opinion, because I'm a mortgage banker, it is a much more friendlier transaction, better transaction, informed transaction, personalized transaction, and controlled transaction for the consumer and our referring partners, the realtors and real estate agents, versus using a mortgage broker. And again, like our mortgage coaches would say, if all you've got to sell is a better interest rate, what does that say about you? With that said, it's Friday Coffee, Mortgage Man Eric. See ya.